about FCA. They are managing a number of properties for passive investing. They also do a little more than just do our property management. They help us with due diligence and with some of our underwriting on deals and markets that they have experience with. So if you have a good property management company that you rely on, they can be an exceptional resource for you as you're making your investment decisions. It's great to have a company that you can trust with a lot of the information, and it does help us try to get our portfolio consistent where we have the same processes and procedures across the board, which allows for efficiency in how we operate, review, and manage our assets. Are you back, Bob? Nope. Wait, I think you're muted on that phone.
How about, okay, there we go.
There you go.
Okay, we are unmuted now from Zoom. All right, thank you. So it's Bob Moore, Managing Director for FCA Management. I've been working in the industry, for about 20 years now. Started as a leasing consultant, so worked my way from just about every position on site into the corporate world, and have worked for some great companies along the way. From Greystar, was a senior director at Greystar for about 5 years. Ran our Charlotte, North Carolina market, which was about 15,000 units, and transitioned over to start FCA Management, and took all of my experience over the last 20 years and built out this property management company, and have been working with passive investing over the last 2 years.
How many units are you currently managing with FCA right now, and how many different markets are you in?
Sure. Yeah, so we are in 5 states, North Carolina, South Carolina, Georgia, Florida, and a lot of different submarkets within, those states, as well as Tennessee. We manage approximately 5,000 units now, and continuing to grow. Steady growth, not anything, we're not looking to be the biggest. We are, very much in a niche market where we want to provide, the best service to our clients and understand their investment strategies specifically.
Okay. I'm not sure if you want to just give kind of a general overview of property management, or if you want to just kind of get into kind of specific questions about kind of let you take the lead with regard to kind of the introduction to what property management's role is with regard to multifamily investment. Yeah,
and fortunately, I had a really great experience in this industry from day one. And, I had some great mentors along the way that really helped me understand the fundamentals of property management. And, it's not rocket science by any means. It's a pretty simple formula. And I go, back to the basics when I talk about this, and it's really very simple. It kind of goes back to the 4 Ps. And so we always talk about this, but it truly is, people, price, product, promotion, very simple formula. If a property is not performing well, we can pinpoint it pretty quickly back to one of those Ps. And the transition of, property management has been through technology. So software, has been instrumental along the way over the last, even 3 or 4 years in property management. And we've been able to harness the data that's always been there. But we've got great companies now like RealPage that has been able to put together business intelligence tools that have, been very user-friendly dashboards for us now, so that we can manage properties from really anywhere in the country and have complete transparency. from those dashboards, from, custom widgets that helps us see that 24-hour data streaming live. And so it's really helped us be better, property managers. So we use that simple formula, but then we, enhance that with this technology. And primarily, our job starts from the first point of contact. So that would be, as soon as a prospect emails us or calls us, then it's our job, to stand out from the competition with our response, to that lead. And so it would be being extremely swift and in answering that, and being very genuine, personable, not robotic. And so from that first, point of contact, it's then our job to start this race to this cycle, which is, every traffic into a lease, every lease, into a renewal, and every renewal into another renewal. So it's just this cycle to try to figure out how to be the best at doing that. And I think primarily, what I've learned along the way is that the best way you can do that is obviously, customer service and the level that you provide from both your leasing team and your maintenance team. From that, I think that once you provide that level of customer service, that's how you stand out from your competitors. And we've gotten to the point now, especially in new development, that just about everything that could be thought of and presented from an amenity perspective, an interior, finish perspective, has been presented. So it's getting much more difficult to find ways to stand out. And so, again, we go back to the basics and the fundamentals of property management, and that is really the gold star of customer service. So, that's what we focus on at FCA Management. We look for unique ways to stand out on that customer service level. That translates over to online renewals, our online reputation, and making sure that, when we're out there in front of the public on all of our online reviews, that translates from the level of customer service, that we're providing on each site. And so, that's just kind of a brief synopsis, of our services and cycle and, what we provide at that level.
Okay. Along that, the 4 Ps that you're talking about, I know a lot of people will be interested in how you guys are doing your rent analysis with regard to setting the rents and the market rents for the property. You can have occupancy, and you can have high rents, and that there are different metrics that people are going after. What tools are you using to kind of identify how to set market rent to maintain occupancy and drive revenue?
Absolutely. So that P is price, as well as another P, which is promotion. So on the price perspective, we do a manual market survey and look at our comp specifically. We don't look just necessarily at price, but we also look at, what promotions they're running, if they're running any concessions. We look at if they're waiving any fees. And we really dig in more of an apples to apples comparison. After that, we also utilize revenue management software. So from an FCA management platform, we've selected to use YieldStar as our primary revenue optimizing software. And in unison with that, we also use another third-party vendor called Revenue Edge. And so the combination of those two helps us, be much more professional in this environment of understanding both, how the revenue management software works, because, sorry, on my light here, how revenue management software works, and Revenue Edge, that service, they understand, the algorithms involved in that, and kind of help be a third party, mediator between us, the property management company, and that software. They continue to push us and help us understand why it's recommending, a $200 increase where, we might think that there's an ability to get $50. It looks at historical data and looks at lease expirations and supply and demand. And it really, what I like about YieldStar is that it makes you compete against yourself and your previous performance. So it's a little bit different than some of the other pricing, revenue management, software that's on the market. So we use those tools to set the price. We do daily pricing, so it does change and fluctuate. We train our team on how to utilize that software to create a sense of urgency. So, if prospect comes and takes a look, and they can go online and they can actually pick the lease term that gives them flexibility to select the exact lease term that they want. So if they want a 8-month lease specifically, we can give them an 8-month lease, but it's going to be at a different rate than a 7-month versus a 10-month or a 12-month, but it's available. And so what that software does is it allows us to control the expirations of those leases so that we don't have 15% of the leases expiring in 1 month. So our occupancy then translates, to a more stable occupancy environment. So that's some of the tools that we use.
As your lights dimming was an indication of cost management and expense management, what factors does a property management company utilize to help owners kind of maintain their expenses and expense ratios, and how are there tools that you guys utilize or other venues that you can access to help in expense management other than motion sensor lights?
Yeah, exactly. Yeah, we do an analysis, of the power usage at the sites. With the portfolio that we have, even during, an acquisition process or due diligence, we'll analyze that prior to taking over a property so that we understand what the opportunities are there. So there's, different programs that we use with local power companies that will come in and change out, existing CFLs to LEDs in both all common spaces and the units. We utilize a lot more technology now. So one thing that we've done, we've started converting a lot of the properties to Wi-Fi managed buildings so that we can be alerted, if there is a problem in one particular area that may be driving up costs. We can be alerted to that. We can make an adjustment. We've also put into place smart thermostats, which, has had a tremendous impact, especially on, mid-rise deals that have conditioned interior hallways where we can remotely access, those thermostats and make sure that both those in the common space, the vacant units, everything is set to, a certain temperature so that it's not constantly running. Motion sensor lights, again, different tiers of those. So, we have lighting systems now that are installed in the breezeways that will come on. They'll keep a low capacity level of energy where there's light, so it still feels safe. But as you continue to walk down the hall, they may continue to elevate, to a second tier or a third tier. So again, we're using a lot of technology now to help create some efficiency in that.
Perfect. I would assume a lot of our attendees would love to know about what would you consider to be the kind of key performance indicators of how you measure your performance at a property versus others in the marketplace. So looking at the difference between occupancy, rent per unit, rent growth, expenses, et cetera.
Yeah. So, what we look at on a weekly basis, we have a couple of indicators, health indicators that keep us informed, if there's something that starts to go wrong on a property. And so, primarily that's going to be your occupancy and your 60-day trend. I mean, those are the first two indicators that says, okay, we're running healthy here. There's not a problem. So occupancy, of course, we want it to be at a stabilized number where there's this delicate balance between where the occupancy should be dialed in and where the rent should be dialed in, and also what that client or owner's investment strategy is for the property. Some owners want to run extremely high occupancy and just create cash flow, and then there's some that want to find that balance that you find an area in the occupancy that satisfies it, but you're also able to continue to push rents so that you're increasing the value of the property. And so we try to find that balance, because I think that's the best way to do this, because we'll continue to increase the value of the property. And so by doing that, we look at that occupancy and we say, all right, this occupancy for an average of a 250 unit property should be, around 94 to 95%. That's pretty healthy. The 60-day trend, we pretty much always want to see that above 90%. If that 60-day trend falls below 90%, then you're going to continue to see issues with that occupancy not continuing to be stabilized. So as long as you can keep an eye on that, that's the key indicator. As soon as that drops below, then we come back and we start looking at the 4 Ps, and we're like, all right, which one of these or a couple of these, where's the issue? And then some of the other indicators, when it gets more granular than that, if we see something changing on that 60-day trend or occupancy, then we'll go to our business intelligence tool and we'll dig in deeper, into that, and we'll take a look and see, okay, are they getting enough leads, coming into the property to get enough leases in order to catch back up on the occupancy? And that trickles down, to seeing, do we have a problem with our advertising? Are we spending the money in the right places from a digital, marketing campaign? What else do we need to do to increase that number of traffic to get those number of leases in order to catch back up? Then we go down to the other Ps and we look at price again, and we say, all right, in the market, are we priced, adequately in comparison to our comps? Do we need to make some shifts on that? So a lot of this, appears to be automated with a lot of this software, and, a majority of the time, all of that works pretty well, but there's always going to be, a personal, perspective to it, where that person has to be involved and has to still pull some levers and say, all right, well, the software is telling me this, but I know there's an anomaly in this submarket. We've got, 3 new construction lease ups going on that, the software's, that those algorithms don't understand that piece of it. So there's always that person factor that still, has to be a part of that process.
Okay, perfect. I guess one of the questions I would have for you is, how is the property management company integrated with the short-term and long-term capital needs of a property? So whether it's preventative maintenance programs or renovation programs that are rolling out, or just putting together the 5-year capital plans for investors to help assist them in their capital planning. How does a management company like FCA assist investors from that standpoint?
Yeah, and I think that's, again, part of our business strategy, even starting this company, was to again, provide a higher level of service to our clients specifically. And so in doing that, we have to truly understand what that client's investment strategy is and how to get them there. And it may be, that they're in this for, a 5-year hold or a 10-year hold or, whatever that strategy is. So keeping that at the forefront of our mind, we try to find ways to assist with that. So in that, in the investment side and the capital side, it's our job and our duty to look for ways to enhance the value of the property. And so, if you've owned the property for 3 or 4 years and we see an opportunity that we say, hey guys, we might have reached a plateau on a rent basis here for what the product is. And we've got a lot of new product in the market, but this new product is, $200 or $300 more per month. So we're analyzing that, on a monthly basis, looking at this and saying, and bringing ideas that say, hey guys, if we would recommend that you invest an extra, $2,000 to $5,000 a unit at this property, and we can bridge that gap in that rent delta between that new product. There's an opportunity here. So that's one item that we'll bring to your attention is there is the ability to deploy a little bit more capital on this current site. And we can, increase the rents by $200 to $300. So that's one way. Another thing that we do is we do a 5-year Capex plan on every property. We actually submit that through our budget process as well. And so with those, the regional property manager, a lot of times myself, will come out, we'll do property walks. So the regional manager does a full property audit on a quarterly basis. And that is a very detailed audit that looks at deficiencies on the property that may lead to long-term Capex problems, like expensive problems. So we're looking for things, even that could contribute to foundation problems, anything along the way, with roofing problems, exterior paint, trying to prevent, more expensive issues over time. So we'll put together that 5-year Capex plan. The third piece is the quarterly preventative maintenance plan. And so our property managers, maintenance supervisors, and our regional property managers work together on this plan. Our maintenance team, is instrumental in keeping up with this. We have a quarterly electronic binder, of course, that they go through, and they take a look at the HVAC units on a quarterly basis. They not only change, the filters, but they clean the coils. They check for the drain lines in the HVAC closets as well, because that's a very high percentage of where water leaks come from when those drain lines get full, and a lot of times even the safety float switches don't work, and then you get condensation and water buildup that overflows and can create some big issues with mold and mildew in there as well. So that's, part of the quarterly maintenance is that, again, it's really just, and this is not just quarterly. I mean, our maintenance supervisors and our property managers are walking those sites on a daily basis. And so it's just having an eye for detail and instilling in them the importance of catching an issue as soon as it happens, documenting it, and then finding a solution ASAP, because even as small as it may be, if that issue continues over a long period of time, it could create an exponential, expense for the property. So I think it's just being aware constantly, of what's going on at the property, and just not letting anything slide as minute as it seems, is the most important thing.
Cost savings, love it. Well, we've kind of driven the process so far, so I believe we can open it up to questions from the attendees. If you guys have anything specific, either use your chat function or the question and answer function. Otherwise, we can let Bob get back to work. But does anybody have any questions from our attendee list? Oh, go ahead. Oops, sorry. I think you need to write the question in your either the chat section or there you go. We can get Bob's contact information out to everybody. Attendees will send out Melissa will send out follow-up information. Do you rent Section 8? So from a property management's perspective, I know that's not your decision from a management perspective, whether you accept Section 8 vouchers or not. How do you as a management company handle affordability issues such as vouchers and things like that?
Yeah, and it's really it's property specific. So we do have some properties in the portfolio that do accept Section 8 that have a portion of those units for that program, and so we do manage some assets like that. I would say that primarily 98% of what we do manage are conventional units.
That kind of goes hand in hand with one of the other questions about the eviction moratorium and how it's affected economic vacancies. But in addition, there are a whole bunch of new programs that are out there that are popping up for assistance to renters that aren't necessarily a voucher like Section 8. How has your management company kind of gotten involved with those and identified those for help with the COVID moratorium or the eviction moratoriums?
Yeah, and we were really we saw this coming early on, so we were extremely active with NAA, NMHC, jumping on conference calls and panels, early on in this back in March, and so we started following a lot of the guidelines as to what people on these calls were talking about. And so as this progressed, we started seeing the opportunity for these programs and how we could benefit, from helping the residents. So we took the approach as, hey, we're not going to just leave this, in the residents' hands to try to figure out how to get to these programs. We're going to be proactive and help them through this process. So, every state, every municipality, has been very different. So there's no doubt about it. It's been a challenge to keep up with it all. And I have, a really incredible team. My regional managers are, focused on this. And so every state that they're in, they've been diving into these programs and then having meetings with their property managers to help them understand how to give guidance to the residents. So through that process, a lot of the, even at the county level, we've seen a lot of help. I've got some properties in Florida too, where I've seen, personally, that area got hit pretty hard, especially in Orlando, which has come back tremendously now. I mean, I've been floored, but during that process, I've seen up to 6 months of rental assistance already. So it's really helped, our bad debt issue that COVID created. But it's all relative to the product type too. I think, some of the ones that got hit the hardest were a different product level than what our portfolio is right now. Our portfolio saw, somewhere between I would say 6 to 8% drop or increase in bad debt, where some other product types, saw 20% or more. So it really just depends on the demographics there and what that impact was. But yes, it's still an evolving process. We get information, literally on a weekly basis as things shift. And so through, that we're on an email chain with NAA and MHC. So as well as our attorneys, that are assisting through any eviction process, and they help us, with that paperwork, and making sure that everything, is done correctly through this process. So again, it is an evolving process. There's no specific answer right now still, but there has been assistance out there that we're helping file for the residents. And I think that's the difference, that we're doing. We're trying to assist them, where there's other, companies in the market that are just being very strict about, hey, you got to figure it out on your own. This is on you. You still have to pay us. But again, it's only going to benefit the property, the ownership group specifically, if we're providing that service. I mean, we're all in it together to try to help the performance of the property as well.
Okay, we have another question from Scott about, kind of goes hand in hand with another question. So do you write your own maintenance calendar, and how is that integrated with your property software? And then the maintenance calendar kind of ties into how often are you doing unit inspections? Do you do them every year, every quarter? What is your kind of best in practice?
So we are we rely heavily on technology at FCA. And so we do require our maintenance team to put all of their calendar, their make-ready boards, everything is within our property management software. And the reason we do that, and we've had to teach a lot of them, a lot of hand-holding on that, because again, some just struggle with the software perspective, but it's important to us to get them trained properly on it, because if that maintenance supervisor is out, if we have turnover, anything that could lead to that, we need to know as, a regional manager, property manager, anybody at that site, where we are in the process with, make readies, quarterly, maintenance. If we don't have that knowledge, it takes us 2 or 3 times the amount of time to get organized to understand. Like if I'm working remotely from here, I could literally get into my computer, look at a make-ready board right here at my office, and if I had to, I can pick up the phone and start scheduling turns with the vendors. So what we want to do is reduce the amount of time that it takes. We don't want to slow down that process, because then that costs us money. It costs the property money, and it hurts the performance. So that's why we require that, software tool with maintenance, everything to be electronic in that.
Yeah, you brought up a good point about outside third-party vendors. How does a management company make the determination whether to do turns in-house versus outsourcing to third-party? And is there a economy of scale at certain property sizes? So I can imagine if you're managing a 300 or 400 unit property, you're going to have on-site staff and maybe a crew that can handle that. But if you're handling smaller assets, like a 50 unit asset, pretty much everything is outsourced. So how do you make that balancing act and with regard to outsourcing services?
Yeah, exactly. And so what we do, I mean, the most important thing for us is to work efficiently. So, we do an analysis of how having the software, we're able to look at the volume of, let's say, service requests that are coming in. And so we try to be efficient in the amount of hours that are spent on service requests and providing that level of customer service to make sure that those requests are done within, 24-hour period. And then what works in unison with that is the make-ready process. So you have to juggle the two. And so in order to continue to provide a high level of customer service, getting the volume of those service requests done, we have to find a way we try to utilize both in-house turns and third-party vendor turns. And so what we do is, my primary goal is to at least turn, a minimum, I would like to at least turn a minimum of 20% of the units in-house. And we're very selective about that. So, we pre-walk a unit. When we get a notice to vacate, our maintenance supervisor will go in and just do a pre-walk before they move out to do an assessment of, what's the status of that unit? Is it going to take a full-on, full paint job, or is this, a partial kind of touch-up job? And so we hand select those units that we feel like will take a lot less time to turn, and we highlight those as we're going to turn those in-house. But if an apartment has had an excessive amount of wear and tear on it, then the amount of hours and time that's going to be spent from our internal maintenance team, then that's not, a wise use of their time, and would take away from the customer service that they're providing on the service request. And so that's how we balance that. If it's a a larger scale property, there are some properties that we have that, maybe 400 units or more. And so those we're able to allocate a select person, like a painter, that does nothing but, turns the units, paints the units in-house, and they might be able to paint, 2 to 4, apartments in a day, and we're able to save money on that. But, where it becomes expensive on the payroll side is you have to think about it. You're not just paying, an hourly rate for somebody, but you have to factor in the burden as well. So if you've got somebody on, full-time payroll, then you're also paying 26 to 29% burden on that. You're also incentivizing them with some sort of bonus potential. And so when you factor in that full amount of that payroll and you compare it to a third-party vendor, 90% of the time it's actually cheaper to go, with the third-party vendor.
Okay. We only have a few minutes left, so I wanted to, again, reach out to the participants and see if anybody else has any questions. And if not, I will turn it back over to Melissa for the wrap-up and how you guys can access the information that you heard today. Going once.
Did you get the question in the Q&A box?
Going twice. Oh, the inspections on each unit. I think we answered that as part of a different question, as part of the maintenance calendar, but
so there's a couple of things real quick to that. Two pieces. So from a long-term perspective, we inspect the units when we do a quarterly maintenance. And so we go into the units, we change the filters, we assess if there's any, beyond normal wear and tear, any damage in there, any problems that may exist, even from, again, mold, mildew. A lot of times people don't report that kind of stuff, and they live in it. So, we need to understand that quickly. And then the second piece is one process that I've always really found beneficial is within the first 30 days of the resident living there, our maintenance team member will come in and do a quick inspection. And again, that helps us assess, if there's anything that we need to address immediately before it gets too far along the way where, hey, they've got 2 pets in the apartment. They didn't tell us they had pets, but within that first 30 days, they're going to move them in. So we're able to go back through and bring it to their attention, the pet addendum, charge the appropriate fees to give us coverage in that apartment if there's going to be, any potential damage down the road. So we do that within the first 30 days, and then we do it on a quarterly basis.
Okay, the last question I see here is it cost effective, advantageous to provide bulk internet and cable? I know from our perspective, it's always a mix depending on what you're providing and where it is, but I will let you give some insights into that as well.
Yeah, this has always been a pretty heated discussion between new construction developers and long-term, investors that will hold these assets. And my experience, I've done both. If you're looking at holding this deal and continuing to build value and increase your cash flow, then I would highly recommend a bulk agreement. And so it depends on the submarket specific. Right now, we are highly recommending bulk Wi-Fi packages. We're kind of steering away from bulk cable, only because everything is streaming now, and people don't want to necessarily have to take a select service. But everybody has internet, so it's not created any objections when we roll out, especially high speeds. We're looking at like 1 gig speeds now, even minimums like 500 megabytes. So on these bulk packages, there is a lot of incentive in place for the providers right now to give some really good deals on these bulk Wi-Fi agreements. So these Wi-Fi managed buildings that I talked about earlier, that is really where the key is, because you're able to get 500 megabytes to 1 gigabytes of speed pretty much guaranteed through access points. So they'll install access points in every single unit, all the amenity space, and that way you've got access to that. And so even if you're in your apartment, you may not be pulling from that one access point in your apartment. You could be connecting to an access point in another apartment. That way they can guarantee you that speed, so you're not overloading certain access points. So with that, we're charging, I would say, anywhere from $70 to $75 a month for bulk internet only. That doesn't include the digital TV. And so, we're paying on average with a large provider like a Spectrum or AT&T, we're paying $30 to $32 a unit on that. So the spread is pretty good on that. And think about how that translates to the value when you're able to increase, anywhere from a $30 to $40 per unit per month other income. Think about how that translates to the value. I mean, millions of dollars in value. So yes, it is definitely important.